There are many that regulate and oversee financial institutions and financial markets in the United States. Each of these agencies has specific responsibilities that allow them to operate independently while working towards similar goals. Sometimes their work is questioned, but they all quite effectively fulfill their main role, protecting investors and consumers. The following is a list of regulators active in the U.S. financial sector. Stock market. The main regulator of the stock market in the United States is the Securities and Exchange Commission, established in 1934. The SEC controls securities exchanges and securities firms, as well as self-regulatory organizations such as the Financial Industry Regulatory Authority, FINRA. The SEC describes its mission as protecting investors, maintaining fair, orderly, and efficient markets, and promoting capital accumulation. The SEC also oversees the Securities Investor Protection Corporation, SIPC, a private, not-for-profit corporation that ensures the securities and cash in the accounts of member brokerage firms' clients in the event of those firms' bankruptcy, but not against other losses. Most types of securities traded in the U.S. must be registered with the U.S. Securities and Exchange Commission. Also, brokerage firms that buy and sell securities must be registered with the SEC and be members of FINRA. Banks. Banks in the United States are either federally or state regulated, depending on how they are registered. Some of them are regulated by both. Office of the Comptroller of the Currency, OCC. It is one of the oldest of all federal regulatory agencies and is part of the Treasury Department. Regulates the activities of national banks, federal savings associations, and operating subsidiaries of national banks and federal savings associations. Federal Reserve System. The Fed is the central bank of the United States, responsible for regulating the financial system and managing monetary policy. Its regulatory authority extends to certain state-owned banks, banking and financial holding companies, foreign banking organizations, and certain non-banking financial institutions. Because he has power over bank holding companies, he is responsible for regulating many of the nation's largest banks. Nationally registered banks must be members of the Fed, although they are controlled by the OCC. Federal Deposit Insurance Corporation, FDIC, provides deposit insurance that guarantees depositors accounts up to certain limits with member banks. The FDIC also oversees state-owned banks that are not members of the Fed. Credit unions. Like banks, credit unions can be regulated both at the federal level and at the state level, depending on how they are registered. Federal credit unions are established and regulated by the National Credit Union Administration, NCUA, an independent federal agency created in 1970. The NCUA also insures deposits in federal credit unions, in much the same way that the FDIC does for its member banks. Savings and loan associations. Savings and loan associations, also known as savings and loan banks or savings banks, once had their own federal regulator, the Office of Thrift Supervision, OTS. However, following the passage of the Dodd-Frank Wall Street Reform and Consumer Protection Act in 2010, the OTS was dissolved and its regulatory functions were divided between the OCC, Fed, and FDIC. Mortgage lenders. Since mortgage lenders are primarily banks, credit unions, savings and loan organizations, they are largely regulated by the relevant federal agency we discussed earlier. Insurance industry. The insurance industry in the United States is controlled primarily at the state level, and regulations may vary from state to state. In order to do business in a state, insurers must obtain a license from that state's insurance department. Insurance agents must also be licensed. The national insurance departments have set a number of rules, including capital and surplus requirements, to increase the likelihood that insurers will be able to pay their policyholders' claims. Real estate transactions. Real estate transactions are governed by numerous federal and state laws. Real estate agents and brokers are licensed at the state level. Financial institutions, financial markets, and financial products in the United States are largely controlled by federal agencies and are subject to federal laws. The main exception is the insurance industry, which is largely regulated by the individual states.